piece of the project and the most important part are the journals. The most complicated part, I should say, are the journals. This is where you record all the accounting transactions. This is this blue booklet. There are 6 journals. One's the general journal, and that's right up in front. That's only used for very unusual transactions that won't go anywhere else. Repetitive transactions like sales or purchases, they have their own special journals. So in the general journal, during the week that you're doing the books, there's only one transaction. You're going to write off a customer's account. But at the end of the month, then there's other things. Some bank reconciliation information, some adjusting entries, closing, that you'll put in the general journal. General journal, just like all the journals, it's got a place for the date, it's got a place for description, and then it's got a debit and credit column. And of course, on a transaction in here and on a transaction in any other journal, you got to make sure the debits equal the credits each time. Okay. So let's start with the 2 cash journals. There are 2 journals that are really designed for any time you're going to spend cash and any time you're going to receive cash. The cash disbursements journal, find that. It's just like a checkbook. You list every time you spend cash. So there's a column in there for cash, and it's a credit column. So there's a set of credit columns, and there's a set of debit columns. Typically, if you're paying cash for something, you're paying off an accounts receivable, or you're purchasing supplies or assets, but you also might be doing something unusual. So for the normal thing, which is paying off an accounts payable, or paying freight charges, those have their own special columns. For unusual things like utility bills and things, which only come up once a month and they're not so frequent, then we have an other column. When you make a payment for one of those things, you need to identify in the other column which account it is that you're going to debit, which expense you're going to debit. So we credit cash, and then here we've debited something like advertising expenses or something. When we use these accounts, we need to make sure the debits and the credits equal. So for example, there's another one that's cash receipts. Those cash receipts, they can be for a cash sale, or typically they're for payment on an account. Now, in the cash receipts journal, usually what happens is the customer owes you money and then they pay early, so they get a discount. So the customer may owe you $1,000, but when you receive the check, it's only $980. The reason is because they're getting a sales discount. So we are going to credit the customer's account for the $1,000, we'll debit cash for the $980, and then the difference goes in the sales discounts column. By the time we've entered that entire transaction, the whole thing's going to balance. Now, you might not remember all those little details about accounting. Many of you haven't ever done debits and credits before. And that's not a problem, because in each one of these journals, you can see a lot of transactions that have been done in November and in early part of December. And so you can just copy the way that they've done the transaction before. If you make a mistake, you'll find that out when you total the columns at the end of the month, and you'll see how far you're off, and then you can fix it then. It's very easy to go back and fix a transaction when you've made a mistake. Something to keep in mind as you're going through. In each journal, there are some places for initials, and there are some places where you'll see check marks. Check marks means you've recorded that number somewhere else. You've posted something to the general ledger, or you've posted something to a subsidiary ledger. So don't make a check mark unless you actually do something. Or don't put initials in unless you've done something. Those are usually control procedures, and they're explained in the flow chart. So if the flow chart tells you to put initial, do it. Otherwise, don't copy that part of the transaction. Okay. If we look at this cash receipts journal again, there's one column for accounts receivable. So if we're receiving cash for accounts receivable, we're going to record it in the cash receipts journal. But if you recall, accounts receivable also has a subsidiary ledger. So we are going to record the cash in the accounts receivable subsidiary ledger as well. And that's in the back of your instruction book. This will be explained in the flow charts, but anytime that there's a subsidiary ledger, you'll do it right then. So if the transaction takes place on December 23rd, you'll go right then to the subsidiary ledger. The final component is the transaction list. Once you understand all those other pieces, then you can use then you're ready to start the transaction list. It gives you a list of all the transactions from December 16th to 31st, and you're going to work through every single one of those transactions, and then you're going to do month-end activities and prepare financial statements and all that. Working through the transactions is about half the project, and doing all the end of the month, end of the year things are about the other half. So there are 19 transactions on here, and you want to approach every one in the same way. First, you look at the transaction and you read it carefully, and you try to understand what's happening. You know, is this a purchase? Is this a sale? Does this have something to do with payroll? You want to think, if I were going to try to do that transaction on my own, what kind of documents would I expect? What kind of data would be associated with those documents? Where might I be recording this thing? Why is this transaction taking place in the first place? All right? So you sit and think about it for a few minutes first. Now, you'll be wrong on many of these things. Of course, this is the first time you've gone through most of this sort of thing, but it really helps you pay attention then when you're working through the transaction and learn as much as possible from it. So the first step is to read the transaction. Second, it tells you which documents you're going to need. The first few transactions, it tells you exactly which documents you're going to need. Sometimes later on, it doesn't give you as much detail once you're used to these things. So it tells you which documents you need. You go gather those documents. And then it tells you which flowchart you're going to need, or at least in these initial transactions it does. So the first transaction, one of the early transactions, for example, is a purchase order. You're making a purchase. So you'll think, okay, I'm making a purchase. So you go to the flowchart, you find the flowchart for making a purchase, and then study that flowchart. Especially, take a note of which documents are used, and then which manual processes are performed. When we get a purchase order, what actually goes on in terms of the workflow in the organization? What are we doing? And then as you're filling out the documents and looking at the documents, keep an eye on what kinds of information are stored and then what kinds of decisions that information might support. We work through these transaction by transaction usually. You'll go in order, but if you get stuck on a transaction, you can always skip it. When you get stuck on something, there may be a hint in my instructions, and if not, you can go to Course Studio and look and see if someone else has encountered that problem and if there's some solutions there. Otherwise, you can talk to me or talk to someone in class, or just skip that transaction. It doesn't matter if they're in order, and then you can pick that one back up at the end. Okay. After you've done all the transactions and you're ready for the end of the period, posted online on my website is a spreadsheet template that you can use, an Excel worksheet. So you'll enter all that information, and then the financial statements will be prepared pretty much automatically after you enter the adjusting entries. So remember that exists, so you don't have to do it by hand. And then last, there's this instruction manual. Solution manual. This is the instructor solution manual. This is my guidebook. It's got all the answers to this project in it. If you're ever using this, you're welcome to use this before and after class, take a peek at it, come to my office hours. If you're ever using it, you should note that there's a lot of different sets of solutions in there. You might remember there was a blue transaction list, the one you're doing, and there was a green transaction list, which you're not going to touch. Well, there are solutions for each one of those transaction lists, plus a lot more. So if you're ever looking at this guide and I'm not with you, make sure you're looking at the main transaction set, transaction list A. It's the first set of solutions in here, and this is the one we're going to do. So now you're ready. Look through everything, get ready, and then there's a few videos that can help you a little bit if you need some more help on the transaction. So just start on transaction 1 and it's going. Good luck.